Hey everyone, Bryan Baylon here, and I am coming to you at 10:11 p.m. So it is kind of late, but I wanted to make a video and share with you some updates for the week. Today's topic is PPP, real estate, and cars. So PPP, Payroll Protection Program. If you haven't heard of that yet, that is basically as part of the stimulus and the CARES Act and recent legislation passed to help business owners, independent contractors, sole props, that kind of thing. What they've done is they have provided a way for you to retain your employees. If you have a business of 500 or less employees, they basically want you to keep those employees and keep paying them, and they're going to give you a loan that is potentially forgivable if you meet a certain criteria. So the way that it worked, actually last Friday, April 3rd, was when businesses, LLCs, S Corps, whatever you file, if you have employees, that's when you could have applied for this program. And I actually ended up applying. I have an LLC, I have a PLLC, but I don't have employees. However, I myself, an independent contractor, is one of the provisions in the CARES Act. They were supposed to apply April 10th. So today's April 10th, but I had applied early. So, I figure I'll just try to apply. If they don't accept it, then I could just tell them, hey, this is my situation. National Association of Realtors has been advocating for realtors to be able to receive this due to the coronavirus hardship. So who knows, right? I just tried applying, seeing if there's any possibility there. As National Association of Realtors has stated on their website. And if you are a realtor, please check that out for this specific information because it updates every day. But I checked this last week that if you are even if you're a solo agent, you have a team, that you are still eligible for this program. The forgivable portion of it is if you use it for qualified expenses. So 75% have to be for payroll expenses. 25% can be for business expenses such as mortgage, rent, etc. Full list, check the documentation. For my purposes, I just wanted to use it for wages that were not able to be gained in a sense, or I guess lost wages, opportunity costs as a result of this. And it kind of stinks. And in my situation, I do have a listing that I believe was priced correctly. And because I think because of what has been going on with the coronavirus, I've had hardly any showings. And I had a listing there a month before in that same area that sold in 5 days. So it just goes to show sort of the shift that has happened. Price point's a little different. That listing I took last month was $370. This one's at $489. So there's a little difference there. And demand 400K and under in the greater Phoenix area is a lot stronger than 400 plus. And think of it as this. Think of it as instead of going 180 miles an hour in terms of that market, 400K and under, think now they're doing 80. And it's still hot, still selling in a couple of days, sometimes selling, within the week. But yeah, so that part of the market's doing well, 400 plus not doing well, but still haven't had a lot of showings, not a lot of opportunity for feedback. So based on market, I went to this week. I went to a market update from the Cromford Report, highly respected real estate analyst company in the greater Phoenix area or Maricopa County. And they had mentioned some of these things, which I'll share with you at another time. Anyway, back to PPP. So process-wise, I had applied. So Bank of America is one of the first to open this program up. And it was opened, I believe, at like midnight on, Friday morning, I guess, of April 3rd. I didn't apply till Saturday. And by then, within 24 hours, they had 66,000 applications, which accounted for an amazing amount of money. It was like already something, I'm guessing at this point, 30 to 60 billion already that was requested from that first 24 hours from Bank of America alone. The way SBA, Small Business Administration or Association, one of the two, has decided to do it is they run it through the banks. So the banks have had to basically scramble. They actually got the most updated policies at like Thursday at like 10 p.m. So they've had to scramble to implement whatever those stipulations were to the consumers that they have. And Bank of America, being one of the providers, was able to apply. Pretty straightforward, actually. One thing, they just want to make sure you're not a felon, right? Or you're eligible and not in any legal trouble or have caused trouble in some way, and that you're also eligible business owner or independent contractor to be a recipient of these funds, and that you're attesting to using them for the right reasons. So I believe it was 0.98%. So it does start off as a loan. So it's 0.98% of a loan. 6 months, payments are deferred for 6 months. And within that 6 month time frame, you can request for forgiveness on the loan, which is another process. But basically, as long as you use them for qualified expenses, for what we know today, that will be potentially forgiven. But SBA is the ultimate determination whether you can receive that forgiveness or not. So with that said, with the information we have today, I figure you can apply, see what happens. And if the loan, if you don't need the money, you don't need the money, but definitely is a option there for you. So there's that. And today I had gotten a call. Yeah, it was today. I had gotten a call from the bank, and it was actually one of the loan officers that was just said, "Hey, I was just trained to do this. I don't really know a lot of answers, but just want to let you know that your application was received and you need to submit your docs." And I said, "I already submitted my docs. I already submitted my 1099s and things like that," which you send in. So they email you, you send in your application, they email you saying they got your application, and then they email you again saying, "We need these docs, time to upload." You upload the docs. It's kind of like a drop, just as if you were to just drop it into like a Dropbox or something. You just drag and drop it, it's scanned in there, and then you submit your additional form. And they did have an addendum, meaning they've refined some of their criteria and they forgot some things, so they want you to re-sign and check boxes, that kind of thing. So that's it so far. We're on April 10th. I submitted it Saturday. I submitted my application Saturday. I got word on Tuesday about uploading my 1099s. I uploaded 1099s on Tuesday. It's now Friday. Got a call today on Friday. So there's an update for PPP. And if you haven't already, it is a limited fund source. I believe the amount, if I'm not mistaken, is around $350 billion. And it's first come, first serve. So if you haven't already, definitely try and apply. What's up? Hey, somebody actually chatted. Joaquin. Hey, Joaquin. Hopefully you're doing great, man. I am doing this thing right now. So anyway, good to see you. Hope you can stay tuned. I just talked about PPP, but now you get to hear some cool stuff about real estate. So the topic was real estate PPP, real estate and cars. So that's PPP, the update there. Real estate. So here's what's going on in real estate is so in real estate right now, I have 3 clients that are under contract on new builds, and they are all within 250 to 350. And one of them set to close on May 12th, another one set to close around June sometime, and then another one probably June, July. So here's what's happening. So based on the COVID-19 issue, as new builds, there were projected dates for them to close, and they normally would have a date where they would know and tell you, okay, you can expect to close at this time, because the buyers need to figure out when exactly they're going to move out and plan and not have to pay for rent and a mortgage at the same time. So with that said, well, I'll just tell you the most recent. So I have one client who is currently set to close. They do have a close date on May 12th, and no snitching on May 12th, excuse me. And so May 12th was their close date. And what's interesting about that is they were one of the 3. They were the ones that actually determined a close date. So here's what happened. So financing was kind of up in the air, and they were basically, they gave us a rate, right? It was a builder's lender. They were giving incentives, closing cost concessions up to $6,000. And that's a builder incentive, and lender was not giving anything. And and that was it. And I think they were going to give you it's $278 a month as a condo. It's a new build condo in a pretty trendy community. You could think, well, the price of the condo unit out the door after all the options, and base price around 354. So you could think that's crazy for a condo, but if you see it, it's like very, very trendy in a hot spot in town. It's in Tempe, and it's when you go in, it's a gated community. When you go in, it feels like you're not in Phoenix, or if you are in Phoenix, you're in like the most upscale, trendy area of Phoenix. It's very much like a young, hip kind of millennial almost design. But yeah, so with that, they were basically the lender had given a quote for, or a pre-qual, I guess, or a loan estimate. That's what it's called, loan estimate for how much the loan fees would cost and your interest rates and all this. And it was something absurd. It was like 5%, right? And right now, if you get 5%, if you're qualified for a house and you get 5%, that there's something wrong, right? And by the way, that's another topic. So loans right now are actually more difficult to get, and there's varying reasons for that. And one of the ways they've made it more difficult, and they're not making it difficult just to make it difficult. They're having to do this because they are actually being affected by COVID-19, and because the Fed cuts the rates, and basically it makes lending money actually more risky for them and less profitable. And so what they're doing is they only want the prime borrowers, and to be able to offset the risk. And so that's why sometimes now I've been in different webinars and things like that. They're saying that they want like 700, sometimes 680, 700 credit scores to qualify for a conventional loan. FHA is still around, but it's like 660 minimum. So anyway, so yeah, there's that. And so it was like 5.1 or 5.2%. And basically I had suggested, why don't you go with another lender, and why don't you figure out what we can do here with these guys? And I have a lender who can basically do zero loan origination, zero was a processing fees, and then zero underwriting fees, which basically, nose is super itchy. Sorry, guys. Which basically makes the loan, I think it's the loan fees, like next to nil, because everything else is like, minor. I mean, sort of minor, right? But I mean, the other lender was charging $850 for underwriting, $850 for processing, and it was just like $2,400, because I think it was another $850 for origination or something like that. So yeah, they were able to give, based on the borrower's credit score, they're only able to give waived underwriting and waived processing fees, which is $1,600 plus $1,000 towards closing costs, which can go towards title fees. So we presented this, and so like what the buyer had done, what we were working on the past 2 days was go back and forth. By all is said and done, the builder's lender had ended up giving, instead of $6,000, now $9,000 in closing cost credits, $6,000 towards the actual closing cost credits, and an additional $3,000 in order to buy down a lower rate. And then we were mixing it up because she was about to put 20% down. We were mixing it up, and then decided to put what we ran scenarios: 10%, 15%, and 20% down. And there was an optimal place there, which around 15%, where she really liked her payment versus her down, basically. So anyway, that's a lot. There's a lot to say there about that. I'll go over that in another time in terms of the intricacies of a loan. But the cool thing is she ended up getting one of the best deals, and even the lender admitted you're getting one of the best deals that anyone in our community has ever gotten. And I've just never heard of a builder giving $9,000 in closing cost credits. But you've got to get a very competitive rate and a very competitive somebody. If a lender's willing to back a really good rate with terms, they got to take that seriously. And boy, did they respond. Unfortunately, she was having a rough experience before this. Afterwards, it's like they rolled out the red carpet. So if you're ever buying a new build, definitely, I'd love to work with you, by the way, if you are down for that. But definitely shop around and have your realtor go to bat for you. Absolutely. So going to bat for my client was great, and she's so much more happy. And actually, the terms are a lot better for her. So she went from like a 3 probably in terms of this to like, oh, I guess I got to do this, to like, hey, like now let's get this done. I'm excited. And she even feels savvy, and I love it. It's great because she is, right. She was asking the questions and things like that. And she took the advice to get a second opinion, and she had to apply. So that's one. And another one, we did again, the other situation, closing in June, 320 is the purchase price. And she was like, hey, we're ready to apply for the loan. What do we got to do? And I said, let's see what they got, your builder's lenders got. And they offered something like, I think it was 4.1, something like that. And then I said, all right, let's go over to our folks over here at my other lender. And what we did is we got another quote, and they basically were able, because they're a well qualified buyer, they were able to get waived the origination fees, processing, and underwriting fees, and give $1,000 towards closing costs. We presented that to the builder's lender. Builder's lender goes back and says, we can do it for 2.75% interest. 2.75% interest. I have never seen anybody even come close to qualifying for something like that, or even being offered something like that, for instance. And this is not like super prime borrower, right? We're talking 730 credit score. Probably DTI is probably pretty good anyway, but I think they were doing 3.5% down. So with that configuration, getting a 2.75 on 30 years, fantastic. So they were happy. I mean, it just speaks for themselves. They were thinking this is a forever home. We could definitely save a lot of money up front. The other lender was going to save them a lot of money up front with the fees, so the more money in their pocket. But we calculated that if they were to do that, take that other mortgage, the interest they'd pay, which the low fee lender was giving a 3.125 versus the 2.75 with no cash to close, right? From the lender, they're not helping out with any closing costs. That we just figured it's a better deal for them to pay up front and then take the lower interest rate, because over the life of the loan, we had just done a quick calculation. Over the life of the loan will be like $22,000 in savings between 2.75 and 3.1. So, if you're planning on paying off your mortgage early, then definitely calculate. I mean, it's all about what your plan is, right? So there's up to 30 years. Get a plan, and you make your decisions based off of that. So if you can, I always believe, and I've recommended to both, well, actually just one of my clients that we went this far, money in your pocket is better than not. So if you can save today and defer that over time, I say take that money and invest it somewhere to make more. So we figured at 20% with the first example, at 20% down, she would basically be saving about I think it was $260 a month. And basically we calculated it'll take about, for her to spend $35,000 down at $260 a month, would have taken 13.8 years for her to come up with that money. And I told her, in 13 years, you can do better, than what you're making, like what you're saving in monthly payment. So I say, go out there, use that to make more money and invest, or start a business, whatever. To which it was very obvious there that was in her plans anyway. So it definitely does take crunching the numbers, thinking about your options, and doing the due diligence, getting a second opinion, and it can actually work out for you. So in both these cases, it actually worked a lot better. Please just don't take the lender's word for it, even if it sounds really sweet, because they start high because they're giving you the closing cost incentives. I think one of a smoking gun here is that the lender that I'm referring my clients to gives those incentives. $1,000 in closing costs, 1,000 or no underwriting, no loan origination, no processing. I mean, I just haven't seen that. I just doesn't. I mean, I haven't been in the business long, 3 years, but I've not heard of a lender being able to do that. So if that's definitely an advantage, and I think that was one of the keys there. So they competed, and they, in both cases, I believe the builder's lender won out, but that's what that lender was willing to do anyway, was to come alongside and help out. So it works out in that way. Last thing is so the cars. So so interestingly, I guess I can't really. If you're watching this, I'm very grateful. There's two people watching. Joaquin's one. I don't know who the other person is, but if whoever you are, like, thank you for watching. If you're super consistent with watching my videos, but yeah, so if you're the same person, also, I don't know if you're the same person. So, but if thank you for you being here and watching. So cars. So this is kind of neat, actually. So I was thinking, got a lot of time, not much to do, and I was thinking, what can I do that I have, like, what can I do right now that I haven't been able to do, but now that I have the time to, I can. And I recently purchased a car about I think December ish, and that was that was at a car company. I won't say it now, but it was a dealership locally in Greater Phoenix. And so what I ended up doing was, basically making these connections with, dealerships, and particularly that dealership. And now, like, what's coming up, and this is sort of like a preview, sneak peek preview, is that I am trying to work out a deal where I can to review some cars. Last Sunday, I went there with a friend to that dealership, and I test drove two cars. I test drove an Audi A6 and I test drove an Audi S4. And I was not impressed with the A6, but then again, I felt like I didn't get the A6 that I would have bought if I would have bought one. And then I also was test driving a S4, which I've always had respect for. Was a bit disappointed with the performance. I think I had just higher expectations of what it would be like to drive it. It definitely is underpowered for sure. I feel like at 350, when the C63 and the M3, which are its competitor, well, kind of, I guess, maybe the M3 sedan, yeah, the C63. I mean, it's just not. They're not in the same class. I mean, they're both running 400. I think the C63 2020 now is running like something close to 500 now. So, I mean, it's definitely outdated in terms of power, but felt nice and things like that. What I'm saying is this: is that I'm going to be doing car reviews for different cars, and in how it'll evolve will be sort of interesting. But definitely want to keep that a secret for now, so you will see that when it comes out. And yeah, I'm pretty excited to do it. I got the camera gear. Actually, you can see it in the back. I've got some camera gear, trying to break out my old stuff, and yeah, I got the drone and stuff like that. So we'll see what we can come up with. I definitely don't want to film it solo, so I might have to get a friend to help me. So we'll see how that goes. But that's it. I'm realizing now that there's a lot of content to discuss. So I might do even specific videos on this. And I'm actually tending to do that live now because there's less editing. And because I'm doing it this way, it just helps me to just get the content out there. So hope you guys are doing great. And we will catch you next time. Thank you so much for tuning in. All righty. Have a good one.